Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we get started, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest is a prominent analyst and investor in the uranium space and the author of the Contrarian Codex Uranium newsletter. Mr. Mart Wolbert, welcome to the program.
Jesse, thank you very much for having me.
I want to start today's interview with your journey in investing. So how did you get started? How did you discover investing in general? And what led you to uranium?
Well, I've been interested in investing for quite some time, but part of me was never really feeling comfortable in entering markets at continued all-time highs. It just kept on going. So I was just like, all right, might as well spend this time researching a bit more, trying to find opportunities. And then everything broke down, as we all perfectly remember 2 years ago in the March 2020 COVID crash. And at that point, when I saw Shell, which was, of course, one of the biggest companies in my own country of Netherlands, going down over 50%, part of me was like, all right, this is the opportunity that I've been waiting for, so I'm going to start investing. So I started with Shell. I guess that in kind of a weird way, energy has always been part of my investment strategy because it started with that. But after that, I started looking for more opportunities as the market started recovering again. And then I came across uranium by a stroke of what some would call luck, running into a video from Cameco talking about this supply demand deficit, but also the fact that nuclear power is actually a growth industry. Now, I've always been a supporter of nuclear power. However, I believe that nuclear power was on the decline, as a lot of people at that time thought, but that is very much not the case, as I think we will get into more in this discussion as well. But the moment I saw that, I recognized the opportunity and I started doing hundreds of hours of research into this sector, which had led me to posting write-ups on Reddit, after that on Twitter, and now I spend almost all of my time on the Contrarian Codex doing interviews, write-ups, company analysis, and more. And I'm very happy doing it. It's been an insane journey so far, but I think that the best part is potentially still to come for the uranium sector.
So let's focus on the overall nuclear energy picture. Why, in your opinion, is nuclear energy such an important piece of the energy puzzle? And are we entering a new nuclear renaissance right now?
Absolutely, we are entering a new nuclear renaissance right now, and I'm very happy that I can say that. Because with nuclear, it provides two key things in a world where people are still very concerned with the ongoing climate crisis, as well as the, well, frankly, getting borderline ridiculous energy crisis that we're seeing right now. You want a reliable green baseload power source, and nuclear power is exactly that. With a 93.5% capacity factor, it absolutely blows intermittent renewables out of the water, with wind with 35% capacity factor, and solar even below that with a 25% capacity factor. And some people would point out that, oh yeah, we can just use battery technology to make up the difference, but that is nowhere near sufficient right now. And that also takes a lot of raw material to get that up and running. Nuclear power is a great solution. And so what we're seeing right now with the nuclear renaissance, we see France, which has the largest nuclear fleet in Europe, committing to a 61.3 gigawatt reactor capacity for the coming years. We see China committing to a massive $440 billion build-up program to build around 150 new reactors over the coming 15 years. We are seeing South Korea, which also has a massive nuclear fleet, with their new president now not only committing to their existing nuclear fleet, but also committing to the new builds, 5 massive new builds that are currently in the pipeline for them. We see the UK committing to 25% of its grid becoming reliant on nuclear power over the coming 1 to 2 decades. We see my own country, which I'm very proud of, committing to 2 new nuclear power plants. My southern neighbor is Belgium. I think that they made a wrong decision when they chose to say, all right, we're going to phase out our nuclear power plants, but they reversed that decision, at least in part. I hope they fully reverse that decision if all nuclear power plants are still, of course, safe and reliable, which is of course very important. But that is great for them as well. And the biggest consumer in the world with an annual consumption of 55 million pounds of uranium, which is, of course, the US recently this year saved the Byron, or in the past year saved the Byron and Dresden nuclear power plants, and are committing to providing funds for more nuclear power plants that are in financial distress and could potentially close because of that. Even Diablo Canyon could still be saved, which is an absolutely massive statement of intent. And all this combines for nuclear power having a renaissance that some may not have even believed was possible just over 2 years ago. But right now we're in the middle of it. And I think it's only going to gain further traction because of all the reasons I mentioned.
So uranium is the fuel for this nuclear renaissance. And talk to us about some of the supply-demand fundamentals and the other factors that make uranium an attractive place to allocate capital at the moment.
So what we're seeing right now with so many countries around the world committing to nuclear power, we are seeing that global demand, including financial player demand, which we can talk about a bit more later, such as with the Sprott Physical Uranium Trust that I'm sure a lot of our listeners today are very familiar with, which has bought millions and millions of pounds and now holds around 55 million pounds. So around or even slightly above what the US consumes in an entire year, which is frankly ridiculous when you think about it. But if you look at this, some numbers point to the annual demand picture being around 190 to 200 million pounds, especially now that we look to switch from underfeeding to overfeeding, which also swings it around 15 million pounds, 15 to 20 million pounds in the favor of the supply demand cap. So this all wouldn't be really a problem, and it wouldn't even be an investment case if we had a supply side that would be delivering up or around the same level or over the demand picture that I just laid out. But it simply isn't. We are looking at a supply side that is delivering around 120 to 130 million pounds a year. So this gap is slowly but surely growing bigger. And what we're seeing right now, especially in a time where energy security is on the top of the list of people's minds, but also of government's legislation, we're seeing that now is the time to look for utilities, to look for more security of supply. So what we're seeing right now is that we are entering a new long-term contracting cycle. A lot of people are focused on the spot market, but I think that the long-term market, where 70 to 80% of all physical market activity in the uranium sector takes place, that is where most of price discovery will happen. So what we're seeing and why it is so attractive, why it has become even more attractive, is because of all these life extensions, because of a massive supply-demand gap. It's because the equilibrium price level due to inflation and supply chain issues all over the world has gone up from what was previously around $55 to $60 per pound, is now, I think, as close as $75, maybe even $80 a pound when you look at an equilibrium price level all over the world. So we're going to need to reach that price. And where are we right now? Far below it, where I think at the time we're recording at around 53, 54.10, something like that. So we're still far below that. I think there's plenty of opportunity left. And as is the case with commodities in general, what you see all throughout history, and I always recommend people to learn from history, because I know this phrase is used a lot, but while it doesn't always repeat, it often rhymes. And what you see with these commodities, not just uranium, you see them coming out of the bear market. You have that equilibrium price level, but it doesn't stop at the equilibrium price level. It pounces right through to make a new high. After that, it will always come back because it is a cyclical industry after all. But I think that we could be in for a very big blow off top because of all the catalysts that are currently persisting in the uranium sector. And one thing that I also want to note is that I think it's really a question of when and not if, for all the reasons I mentioned, but also because further up the fuel cycle, we are seeing prices of UF6, we are seeing prices of SWU going up exponentially. And this has always, in every single uranium price cycle in the past, this has always preceded new and strong price discovery in the price of physical uranium, which of course then also hopefully translates into the price of the underlying equities. That is what makes uranium such an attractive investment, especially right now as we just came off the back of another correction, together with a risk-off environment in the broad equities market.
Can you demystify the way that uranium is bought and sold? Because it can be very confusing. There are, purchases that can happen off the spot market. There's long-term contracts. There's carry trades. And I know a lot of these contracts have non-disclosure agreements attached to them. So it's all kind of very mysterious and opaque. Could you break down the way the market works for us?
I can try my best. I think that you're very correct that a lot of people that come into the uranium market, especially for the first time, notice that it's very different to what the oil market or how the gas market would normally operate. So what you're seeing is with these utilities, usually secure ounce of uranium for the longer term. They don't go out every single year or every single month to try and secure more supply. From the spot market, for example, they get the security of supply with these long-term contracts. And these long-term contracts go for 8, 10, 12 years. They go for a very long time. And that's what we've seen in the last major contracting cycle as well, in the last bull market. So what we're seeing right now is that utilities are back into the market, and you're seeing that these long-term contracts that I just mentioned, they go out not only this decade, so up until 2029, but they also go into the 2030s, 2031, 2032, 2033. So these are all also things that are happening right now. And you also see volumes increasing. I think that it's good for everyone to listen to the annual conference call from Chemical, where they laid out the fact that they have contracted, I think it was from the top of my head, 40 million pounds just at the start of this year. And that is how these utilities operate. And the beautiful thing about this is that once they really start moving, a lot of them will come into the market. And this is where I often quote my favorite quote from Kazatomprom, where they basically say there may not be enough guaranteed supply for everybody. So as more utilities come into the market, more price discovery will happen, because once the low-cost producers are all contracted up, that's when you move up the price scale to perhaps more like the medium cost producers and the higher cost producers, because they simply have to. You can't run a multi-billion-dollar nuclear power plant without actually buying the fuel. It's like buying an expensive Ferrari, but not wanting to fill up the tank because the gas prices are too high. And with nuclear or with uranium being a relatively low part of the cost structure of this nuclear power plant, especially compared to natural gas or oil or coal, there is no reason for them to say that our uranium is at $100 per pound. Let's not contract right now, because that is just not done. So that is definitely something that is that we're seeing happening right now. And while these contracts are indeed filled with non-disclosure agreements and details are often not public, we know that timeframes are increasing, we know that volumes are increasing. And one thing to note as well is that these utilities, not only in the US, but also in Europe, have been drawing down inventory, and inventory levels appear to be below what would normally be the historical average, and what would normally be the guidelines, like 2 years for the US, 3 years for Europe. And what I think will happen is, I think that we will see a restocking, not just to those aforementioned levels, so the 2 and 3 years for the US and Europe respectively. What I think will happen is that in the midst of this energy crisis, and in the midst of everybody so focused on having that security of supply and having that, making sure that we do not get blackouts and that we have that energy security, I think that what we will see is we will see utilities buying inventories up to that level, and perhaps even going as far as taking an example of what the Japanese had been doing, which is having inventories up to 4 to 5 or maybe even more years. So if that happens, you have a long-term contracting cycle on top of a restocking of inventories, and the combination of that will be subject to a lot of price discovery.
I think an important part of looking at any investment and doing due diligence is trying to find out what could go wrong with this trade. So in your opinion, is there anything that could go wrong with uranium? And if so, what would that be?
There is always something that sadly can go wrong, even though I just mentioned a lot of catalysts, and I even left out some as well, because otherwise we will be sitting here for probably an hour or so. There's always something that can go wrong. The most obvious one is obviously a nuclear power plant malfunction or quote unquote disaster, as we've seen with Chernobyl, with Fukushima, because that simply kills the narrative. Well, I do think that if something like that were to happen, but if it were to be contained, that it would cause a hit, but the market would recover because nuclear power is now seen as the solution for the climate crisis and for the energy crisis that we're seeing right now. I think that a major disaster, which is, by the way, very, very unlikely, I cannot emphasize that enough, is something that would probably either mortally wound or at least push this thing back, push this thesis back a couple of years. Another thing that could go wrong is not necessarily something that is for uranium specifically, but it's a broad equities correction or a liquidity event, to call it that, which would push down a very illiquid uranium market. Because I want to remind everybody listening, the uranium sector right now, even coming off of the recent lows, is only $40 billion or around $40 billion of a combined publicly traded market cap, which is absolutely tiny. It's peanuts compared to a lot of these major companies, let alone when looking at entire indexes. So it is a very tiny market, and a liquidity event, it will get sold, it will get volatile. So that's something to keep in mind. But with the way that the broad equities market is handling right now, I think that we will still see new all-time highs in the broad equities market. And I think that once we get either renewed stimulus combined with a new risk-on environment in the broad equities market, that uranium will once again thrive on this as well, and on the back of these fundamentals. But that, of course, remains to be seen. It's very volatile, macro, and the broad equities markets are very hard to get a grasp of, especially this current environment. But all in all, I think that those two things are definitely what could go wrong. A third thing that is also often discussed by uranium bears is that Kazatomprom or another player could perhaps flood the market with new material, but with the supply-demand gap that is currently in place, and Kazatomprom still committing to producing 20% below that sub-Saharan user agreement, at least until 2024. I think that is both very unlikely, as well as not even a bear case when you look at the numbers right now and the sheer amount of demand that is in place. So I would say that those three things are probably the ones that are worth considering.
You mentioned volatility there, and I want to touch on that because both the spot price of uranium and uranium equities can be quite volatile. And I know both of us are quite active on uranium Twitter, where you see a lot of people focused on the day-to-day price moves and getting excited or getting despondent when they see price moving up or down. Do you think it's more important to look at the long game, to look at the bigger picture, and maybe some advice on how an investor can overcome that psychological hurdle of having their money in such a volatile market?
Well, I think that it's important to note that everybody obviously has a different strategy when investing, right? Some people may be trying to swing trade this thing. Some people may be trying to take short-term profits because they want to put the money elsewhere, whether on an investment point of view or something in their personal lives. So, but in general, I would say that it's more important to look over the longer term, because these equities, they can fluctuate 5, 10, 15% in the span of a single week. And there's enough volatility to make basically any investor nauseous. So it's very understandable that people struggle with that. And my advice to those people would be three things. It will be, first of all, to keep reminding yourself, and I know this can be very annoying, but keep reminding yourself of the fundamentals, keep building that conviction, because that will allow you to hold on through the volatility. The second one is to make sure that you also take time away from the market. You don't have to stare at the screen every single day. You also don't have to stare at the screen every month, but at least keeping an eye on it, I think, is good. For example, if something really happens that requires some sort of action from you, it is very important to then be available to do that. But definitely don't be glued to your screens, because then you're only like bullying yourself and making it harder for yourself to handle it. And the third one is to try to have a cash position available, because when volatility drags your investments down and you have cash on the sidelines that you can deploy, that will allow you to look at this correction and be like, all right, this hurts, but at least I can use it as some sort of an opportunity, which takes away some of the edge, in my opinion. So I think that those things might help a lot of investors handle day-to-day volatility, but I cannot emphasize enough, please keep focus on longer term. I think that the coming 12 to 18 months will be incredible for the uranium space.
Excellent advice. Now, how do you approach the uranium sector yourself? You mentioned the Sprott Physical Uranium Trust earlier. Is that something you like? Do you deploy capital into ETFs, explorers, producers, developers? Is it a mix of all of those? How do you approach the space?
Again, very personal, because everybody has a different tactic. Everybody has different risk tolerance, different portfolio strategy. What I would say to most people is that if you don't want to go through the work of trying to pick individual equities, I would say go for the quote unquote safe route and go with URA, or preferably URNM, because it is a pure play ETF. If you don't want to take a lot of risks, you could go for one of the big players such as Casanoprom, Cameco, and then perhaps also go for the Sprott Physical Uranium Trust, because that gives you exposure to the price of physical uranium. And those are also very liquid vehicles, so that will also be an advantage if that is required of your portfolio size, of course. But what I personally go for is a sort of pyramid strategy. And what I mean by that is that you start with the building blocks. You start with a strong base. You start with what I just mean, with your Camecos, with your NextGens, with your Global Atomics, with your Dennisons, with your Energy Fuels, with these big companies that already have either a large deposit or are producers or have some other big advantage that really gives them a lot of quality. And that's where you start with your building blocks. And then you can go up the risk spectrum. You can start building with perhaps later stage or earlier stage developers. You can go with quality junior exploration companies, the companies that give more torque, but will be kept up by that strong base. So if they fail, you still have the base of the proverbial pyramid to keep your portfolio at least holding in strong. Of course, if the entire sector is getting weak, all companies will get hurt, but usually the bigger ones are slightly less volatile. So that's also something to consider. But this quote unquote pyramid approach is definitely something that I think could be a good way to go for a lot of investors in the space.
So could you let us know what are some of the things you look for when you're looking at an individual uranium company in any of the stages of development? What are some of the things that you look for? And then conversely, what are some of the red flags that turn you off of a potential investment?
Well, in terms of red flags, there are a lot, because we're talking about natural resource investing here and junior mining companies. So there are plenty of red flags. But let me start off what I look for in a uranium company or a natural resource company in general. I look for a good and experienced management team, a team that has done it before, a team with experience with the task at hand, not with like a different commodity or with an entirely different way of bringing a project forward, like going from producer to exploration company. That could sometimes work, but I want a management team with experience with the task at hand. I want an asset that shows promise, like an exploration team that is trying to explore for uranium in and around an area that there simply hasn't been uranium found before, or no indication that there is even uranium. So an asset that shows promise. So that also needs to take into account, where is this asset located? You need to take into account jurisdiction. If you have a great asset in a terrible jurisdiction, that can still bring with it its own problems. The same thing counts for if you have a terrible asset in a great jurisdiction, you have entirely different things to deal with. So you want the asset to show promise. You want to see good drill results. If it's an exploration company, I recommend talking to a geologist in that case, because they can be hard to interpret. And the third one is that I want to see a clear plan. If it's a development project, how are you going to bring this thing forward? What are the risks involved with it? How are you going to finance this? What do you think is needed to bring this project forward in terms of new permits from the government? Are they compliant with your project? These are all things to take into account. So you want a good management team with experience. You want a good asset that shows promise, that can be expanded, that can become a great asset, and or already great asset that will be even better, and a good plan that's in place for getting the most value possible for shareholders from this asset. Now, in terms of red flags, I think it's completely opposite of what we just mentioned. If you have a management team that is not honest or not willing to answer critical questions or answer questions at all, I've seen that before as well as a major red flag. If you see an asset that you know is not very promising or that drill results, where key details are left out because they want to pump a certain part of it, but they leave out what could potentially be a deal breaker for any given asset, that is definitely something to look out for. I think that if they are doing constant capital raises with cheap warrants and cheap options for the people participating in it is a very big red flag, because then they're only mining shareholder value instead of actually pulling drill tips into the ground and trying to create shareholder value. So those are definitely things to look out for. And you need to keep in mind that there is a lot of companies in the natural resource space that are simply out there to extract as much shareholder value as they can and not really create a whole lot of it. So look for the companies that are really looking to create shareholder value. Look for a management team that is aligned with your own views, preferably one that also has skin in the game, because if you are rewarded, if they do a good job, they're rewarded as well, and it will give them more incentive.
Well, thank you so much, Mart. This has been an incredible conversation. I've learned so much. I'm sure everybody watching has as well. For those viewers who want to learn more about your newsletter, the Contrarian Codex, what can you tell us about that?
As I mentioned at the start of the interview, I spent almost all of my time on the Contrarian Codex, where I do company reviews, where I have a newsletter once every 2 weeks where I go over uranium sector, but also other contrarian investment opportunities in the market. I do interviews with very smart people, with CEOs of various companies. We also have a great Discord community where we can discuss strategy, where people share their stock picks. So that's also a great part of it. And there are a bunch of other things, and I highly recommend people to check it out. I would love to welcome new members to the Codex community. And if you have any comments or questions, please let me know. You can send me an email at contrariancodex.gmail.com. If you want a newsletter sample, then I would be glad to send you that as well. You can also send me a personal message on my Twitter account, which is at yellowbull11. And I hope that everyone enjoyed the conversation today.
Great. I'll put links to those in the description below so people can find them easily. Thank you very much, Mart, and look forward to having you back sometime in the future to continue the conversation.
Thank you as well, mate.
If you enjoyed this conversation with Mart Wolbert, you will not want to miss my interview with Terry Papineau, where we talk about why his portfolio is 100% uranium and the catalyst that he sees that place uranium in a league of its own.